Imagine this situation. You're in a trade, you're up nicely, and obviously you're thinking, when do I get out? When do I get to that point where I'm out of this trade and I can lock in those profits?
Do you understand that part where I can't get out? I can't get out. Okay.
But the other question you might be asking yourself in the back of your mind is, where do I stop? What point do I get out of this trade if it goes against me? Let's talk through some of the ways that we can preserve our capital to become a more successful trader right now. Hi, I'm Aaron.
You done messed up, Aaron!
And over the last few years, I've been trading specifically the Nasdaq charts. And these two methods have really helped me become more profitable in setting my stops to preserve my capital.
Oh, you're gonna get to the point when you get to the point.
So before we get into those two things, I want to talk through three concepts that are very important before we even take a trade. Why am I talking about this when we're talking about where to put my stop loss? Because before we even get into the trade, we want to make sure that we put ourselves in a good spot for the best result possible. The first concept that we need to understand and make sure that we put in play is understanding where we are on the charts. What does that mean? So what this means is we need to understand our support levels and we need to understand our resistance levels on the charts to help us understand where to take those trades and to where to put my stop loss. Number two is we need to know our risk to reward measures before we take any type of position. So again, in my mind, I'm thinking through these potential setups and I'm thinking, okay, if I take this trade, what is my risk to reward? Personally, I don't use a risk to reward strategy. I don't use a 3-to-1 or a 4-to-1, but I do think in my mind, how close am I to a support area or resistance level before I get into that trade to help me with my stop, to understand where I am on that play. The third thing that I want to talk through here just really quick before I get into the two methods is accepting your risk. This is one of the most important things if you're ever going to be a successful trader is you must accept the risk.
I measure danger only in terms of profit. If the reward is great enough, I accept the risk.
On any position that you get in. What do I mean by that? Have you ever got into a trade and right when you got in, you were thinking, oh man, I think I need to get out. I'm fearful.
Yeah, exactly. How did you know?
You did not accept the risk. If you accept the risk on a potential trade, you're saying, if I get in right here, I accept that this might go against me X amount, and I'm okay with that. And if it gets me out, if it stops me out, I'm okay with that. If you're not okay with that, there's several things that you need to look at there. We're not going to talk about those in this video, but I will cover that in another video. So while you're here, let's talk through the two methods or approaches that I use for stop loss and where do I place it. So the first method and approach that I want to talk through is what I call the points approach. Now, the points method is a great option for new traders that are just getting into the market and really want to kind of eliminate the psychological piece of the game when it comes to stop losses. So as I talk through each day within our Discord, that there are three things that are important within a successful trader's mind. It's the technicals, the psychological, and the risk management. Right here, we're talking about some risk management concepts, but one thing that really does kind of cross over in the psychological piece of it is the stop loss. If I get into a trade and I'm down and I'm red and I'm holding and I'm hoping, I'm really enforcing negative concepts that are really going to hurt me over the time of my career, and that'll be hard to kind of eliminate. So if we can really use an approach that'll kind of help mitigate that piece of it, which would be the points approach or method, that'll really help us in the long run.
I like it. Paul, I like it.
So what is that? The points approach is when we get into a trade and we automatically have the take profit and the stop set for that position right when we enter. Now, if you're using Trade-Evade, if you're using any type of platform that's more modern, I know that's probably going to have some sort of option to do this where you can get in, it's going to give you a bracket, and then that bracket position, you'll have a stop and a take profit. That's one of the first things that I did to really get into the market. I would set a stop and a take profit when I got in that position, and that bracket play would work out nicely oftentimes. Now, there are times if you do take a bracket position to where you're maybe off on your timing on a position, right? You maybe see that it's going to go up, or maybe you see that this position is going to go down to the downside, but you just get in a little bit too early. That position goes against you a little bit, and let's just say it stops you out at 11 points, right? And your stop is at 10 points. That can do something psychologically to you if you're not careful, and especially if it happens several times. So just know that if you do take this points approach, that is kind of a drawback or a con, if you will, of it, of if I get into a play, I really need to make sure that I'm taking a good entry. Did I get him? Did I get him? Kind of going back to those three concepts we just talked about, understanding where we're at, understanding where I should place that position, and being okay if it goes against me in that accepting the risk. That's the first option and method. The second method that I have here is what I call the previous candle low approach. The previous candle low approach is saying, if I trade, for example, the 2-minute or the 5-minute charts, I'm going to set my low or my stop loss on the previous candle's low. So if I do that and I'm taking a long, that is going to say it's only going to get me out if it goes below the previous candle's low. Now, vice versa, if you're taking a short, obviously you'd be looking at the previous candle's high, and that would be your stop. So this is another great approach in that oftentimes if you read candle price action, which is one thing that we do within our community, this is a great way to really minimize your losses, while at the same time, there's a really high degree of winning that you can get out of letting your runners run and really just stopping out quickly to ensure that you're protecting that capital. If these are things that you think would be helpful for you and you really want to dive deeper into these concepts, make sure you subscribe to this channel, like this video if you would, and join our community. We'd love to have you as we talk through these setups. Each morning, I actually have a pre-market, if strong, if weak scenario for that particular day. A lot of times it was actually play out, and it just helps you understand and prep for the day to make sure that you know what to expect. Have a good day, and thank you for watching this video.